I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Jane Ma, co-founder and co-project lead at zkLend. Jane, welcome to the show, and thank you for taking the time.
Thanks for having me on, Ashton.
You're very welcome. I'm excited to dive into zkLend. I feel like DeFi needs to take it to the next step with introducing zero knowledge, and I'm interested to hear the solutions that your team is driving into the blockchain space. I would love to kick off our conversation with just an overview of the solutions that your team is working on right now, and then we'll dive into the details.
Sounds great. So I guess a quick intro on zkLend. We are actually a borrowing and lending product built on Starknet, one of the latest layer 2s out there. On a very high level, the name of our project is actually called zkLend, but we have two protocols embedded underneath it. One is called Artemis, and it's an unpermissioned DeFi protocol targeting basically anyone. Anyone would be able to deposit their assets and earn a yield, as well as put it up as collateral to borrow other assets as well. On the other hand, we have another product called Apollo, and that is our permissioned lending product. And it contains a whitelisting layer, and it's really catered to institutions. So in order to access that protocol, you actually need to go through a KYC or KYB check and get whitelisted and interact with other whitelisted participants as well. So I guess the focus of the project is really to deliver a first-class lending product on Starknet, so that there is the ecosystem participants have an option to really go to a flagship money market protocol and borrow and lend.
Very cool, Jane. I'm interested to hear about both sides of the project and about Starknet as well. And we'll dive into that in a little bit. I would love to, hear a little bit of the problems that you first saw in decentralized finance with borrowing and lending, and how you derived the solutions from what we're currently facing in DeFi.
Yeah, I think there are two parts to it, and that's really central to our investment thesis. The first part is we really like Ethereum, right? We've been looking at DeFi for some time now, but as a retail user myself, when I first started using some of the solutions, and I was just, pressing a bunch of buttons and trying to figure out what was going on in the protocols, I realized that the money I was trying to deposit in was the equivalent of like the gas fees that I would have to pay to transact. And this is like a one-way transaction, like never mind about like redemptions and everything that comes along with it. And I realized that affordability is actually a huge problem in the market. And I know that there have been a lot of other blockchain networks that have come about, but a lot of them do trade off kind of security and decentralization for scalability. And for me, it's really a non-negotiable. So I felt that, a lot of these layer 2s do retain the security and decentralized features of Ethereum layer 1 and delivering scalability to users. So it's a win-win. And that's one of the reasons why we decided to build on Starknet. The second part to kind of our investment thesis is really the institutional aspect. My co-founder, Brian, and myself, we actually both started out in TradFi backgrounds. And what we've realized is that this market is truly untapped. You do see a lot of native crypto institutions very actively involved in the DeFi space, prop shops, VCs. But at the same time, there is still a lot of untapped potential from TradFi institutions. And we think that's really the next frontier. So as retail money tops out, we really want to make sure we capture this opportunity.
Definitely, great point there. And further on the institution side, with the market dip in the last few weeks here, I feel like it's a great opportunity for institutions that have been waiting for that time to get into the market. Have you been seeing institutions increase their interest throughout 2022 and just waiting for a time to be getting into not just crypto, but DeFi lending protocols as well?
Yeah, definitely. I think the first barrier is just getting interested in crypto, as you said, because that just because you're interested in buying Bitcoin or Ethereum doesn't necessarily mean that you're interested in DeFi. That's like another barrier on top of, I don't know what you call it, but that's another barrier on top of kind of becoming or entering into the Web3 space. We've definitely seen a lot more of that. The recent, don't know if you guys saw the Jane Street kind of, I think Jane Street and who it was, but Jane Street got super involved in borrowing and lending protocol. And, we also saw Goldman a couple of weeks ago announce kind of they were also getting into the space. So I think there's definitely a lot of opportunity, but fundamentally institutions also have to be very cautious because of the regulatory environment. And as we know with DeFi, there are still a lot of kind of regulatory questions surrounding it. So I wouldn't say it's like a dash towards DeFi, but rather kind of a slow and steady case where maybe one or two institutions will come out and they'll do something and kind of test the waters and see kind of what the regulatory response would be before more of them pile in and then kind of jump in to the space.
Great insights, Jane. And now this is for both products, but I'm sort of interested in the retail side. How long has your team been working on this, and is it live right now?
Yeah, so maybe I'll give you a bit of insights on kind of our timeline and the way we plan to roll out our protocol. So we kind of see Artemis, which is the DeFi protocol, as the bread and butter of our project, because ultimately we are DeFi users ourselves. We kind of understand the product. Whereas with institutions, we do need to go out there and find the institutions involved, understand the regulatory requirements, understand kind of the KYC and KYB off-chain and on-chain. So there is a lot more work and a lot more time that we need to pile into this. So with our Artemis protocol, we are developing our MVP right now. And that is, I think, scheduled to launch sometime in late June. However, this will only be on testnet and to a select group of participants. The larger protocol, which we call V1, which will be open to the public, should be coming out at the end of September. And hopefully this coincides with the wider kind of StarkNet public launch for as the network also ramps up for public use.
That's great to hear. And yeah, I haven't heard too much about StarkNet in terms of layer twos, and obviously in the last 12 months, layer twos have really taken off to be multi-billion-dollar projects on top of Ethereum. Is there something specific about choosing StarkNet as the layer two for zkLend that makes it the optimal choice?
Yeah, I think a little bit of background as to kind of why we started with ZK rollups in the first place. Our tech lead, he's been looking at kind of layer twos for some time now, and we were thinking between optimistic rollups and ZK rollups. And we knew at the time that ZK rollups were they were a lot more complex and the network itself would actually take a lot more time to come to be like realized. But we felt that, this in the long term, not only thinking about like 1 to 2 years, but in the 3 to 5 year horizon, that really is the ultimate scaling solution for Ethereum. And Vitalik has actually said that in Endgame as well. So we knew ZK rollups were the way to go. As to the different solutions out there, I know there's obviously ZK Sync, Starkware, as well as Scroll. At the time, with Starkware, we saw StarkX, which is kind of like it's not exactly StarkNet because it's not a general network for like ZK rollups, but rather it's kind of like a compression network made for specific applications like DYDX, SoRare, ImmutableX. We've kind of seen the kind of great work that they've done with DYDX. And we saw kind of the gas fees that they've been able to save and the trading volume they've been able to support. So for us, it was a track record that had been proven by the team. And so with that in mind, we felt that Starkware had the best credentials. We also spoke with the team, felt that they were very supportive of different dApps building onto StarkNet. So we really felt that they were the winner of all the ZK rollup layer twos out there.
Great insight. I'm looking forward to seeing that launch, as you mentioned. Now, with lending and borrowing protocols, often there's a lot of people that want to borrow capital to increase their leverage in DeFi, but that capital needs to come from somewhere, right? And I've heard of other DeFi protocols, having a harder time finding the capital for people to put in to be borrowed from. Do you see any issues with that, or are you guys expecting there be a lot of capital on the borrowing side and a lot of lenders as well?
Ashton, I think it's interesting that you say that because when I look at some of the lending protocols, what I have seen is there's often a slight imbalance between like lenders and borrowers. I do actually see a lot of lenders or people who want to earn a passive income. So let's just say I hold a lot of ETH and I just want to earn a passive income. I would deposit it into a lending protocol. And I've seen a lot, well, if you look at some of the pool numbers of, let's just say, Aave and Compound, you will see that especially with stable coins and ETH and wrapped BTC, there's a lot of people doing that, whereas the demand to borrow tends to be slightly lower. So fundamentally, there is an imbalance, but that's what basically sets the interest rates, right? Based on pool utilization, that's how interest rates get determined. I mean, there are different ways to also incentivize this utilization rate. We can obviously use our own native zkLend token called ZEND to incentivize borrowing. So let's just say if people are not borrowing and people are depositing money into the pools and realizing, okay, my yield actually is not so great because no one wants to borrow, then what we could do is we could actually offer ZEND tokens to borrowers to incentivize this kind of activity. So there are definitely levers to do that, but as to kind of naturalizing the market balance, I do think that the utilization rate within pools generally figures like or balances itself out.
Good insights, Jane, and interesting addition in there with the ZEND token. And I'm curious if it's also utilized on the other side for the borrowers or for a barrier to entry to get into the platform or for governance, and what else you can maybe mention about ZEND since we're talking about it.
Yeah, so still early days. We don't have, well, we have token launch plans, but we don't have a date for it yet. But what we do know is that the token is going to be at the center of the protocol. What it's going to do is we're going to use it to incentivize borrowing activity. We might incentivize lending activity as well, depending on market conditions. And with the ZEND token, we do plan to use it. It is also our governance token. So eventually, as we transition into a DAO setup, we do expect token holders to be able to vote on different proposals, such as listing different assets, collateralization ratio, interest rate curves, even emissions. So I would say the token plays a really big role. And I guess more details to come later on.
That's more than enough for now. And yeah, you're right. There's still a lot to be done, with the upcoming launches, and it's a lot. So I don't blame you there. And you mentioned there about voting on assets. I'm curious if you have any insights into maybe the first assets that'll be there. Will it be stable coins and the major caps, or are you focused on something specific?
Yeah, so we are focused on the shorter tailed assets to begin with in our MVP. Just because StarkNet is still a pretty nascent network, and Chainlink actually hasn't come onto StarkNet yet, and we will be using a native price oracle on StarkNet just to test it out. So I think ultimately there are a lot of inherent risks in listing long-tailed assets, as I'm sure you have seen with a lot of DeFi exploits in the past, I don't know, forever. So we are starting out with 5 assets: wrapped BTC, ETH, DAI, USDT, and USDC. So really the safest guys out there. And it's a good way for us to test the soundness of our protocol before we take on more risk, because it's ultimately our clients or our retail users' funds that are like safe. They're safekeeping. That's the most important for us.
Definitely, I like those assets, and I'm looking forward to seeing that. In the MVP. And you mentioned briefly the timelines. What are the main things that you and your team need to do to ensure that the product rolls out on time and at the level of readiness for the borrowers and the lenders? Yeah,
so I think the reason why we started out with an MVP that is for internal or for a whitelisted group of users only is because we want to get feedback on the entire user experience, right? We've done user interviews. We've designed the UX and UI in-house. We think we know what users like, but at the end of the day, they have to deposit with test tokens and really give us feedback before we iterate on version 1. Version 1 will actually be a little bit more aggressive. We do plan to list out more assets. And we do plan to introduce the token reward mechanism. So what we call it the Ouroboros model, but really it's our way of incentivizing borrowers to participate in the protocol. And this version will actually be formally verified by one of the auditors. Well, and then it will also be audited by another auditor. So we're really going through kind of 2 levels of checks before this gets deployed onto mainnet with real money being used by retail users.
Mm-hmm. That's good to hear, Jane. And for the viewers and people that are interested in innovative DeFi protocols, what is the best way for them to follow along in lead up to those launches?
Yeah, I mean, I would say we're probably most active on Discord and Twitter. So our Twitter is zkLend, and our Discord channel. I think you would need like an invite link to join, but I'm sure you can find it on our website, zkLend.com. We're very active there. Brian and I actually host AMAs twice a week now, actually, to really keep the community updated on developments. We'll likely also open a whitelist for users to actually try out the MVP, even if it's not real money, just to get some feedback on the protocol. So welcome everyone to check that out.
Very exciting. And yeah, I will leave that Discord link and the website and the other socials as well in the description box below for the viewers to make it easy. I appreciate you taking the time to come on, Jane, to talk about all things zkLend. It sounds like you have a big project and there's a lot to do before the launch, but I have high hopes that you're going to do a good job on it. So I'm looking forward to seeing that. I would love to follow up in the near future when that happens. And until then, let's chat in the near future.
Thank you, Ashton.